Alright everyone, Cowboy Trades here, welcome back to the channel. So there is currently a Bitcoin miner capitulation, let's talk about it. If you watched the channel, yesterday we informed you that more than 55,000 Bitcoin was being market dumped on exchanges. In the past 24 hours that has slightly gone down, however, once again like we talked about, huge spike in Bitcoin balances on exchanges normally correlates to a further roll down in price action. I did some digging and it looks like it is the miners that are selling. Now I'm going to present a few different sources on how I've come to this conclusion. Our first chart is going to be from an indicator called the Bitcoin miner sell pressure. This indicator is made by someone called Charles Edwards. I've gone through their work, they seem very trustworthy, and they are also followed by one of my favorite economists. So this seems to be coming from a trustworthy source. If we do look down here, let's come down to the daily time frame so we can see the massive increase in the Bitcoin miner sell pressure, meaning Bitcoin miners are liquidating, they're selling their Bitcoin in reserves. In the past 40 days or the past 6 weeks or so, you can see the Bitcoin miner sell pressure has gone up by 5.5x or roughly about 556%. This is no joke. Now, what does this mean for the price action? Well, this chart alone is somewhat ambiguous, so we're going to run through this one and we're going to talk about some other charts which are definitely less ambiguous. But let's look at what happens when the Bitcoin mining sell pressure starts to rush to the upside. Now, I would like to highlight, you might be looking at these and thinking, this isn't too much of a run to the upside. This tiny push up represents about 176% increase. So bear in mind, a lot of these runs to the upside, they are huge miner outflows. Now, you might be thinking, miners are selling, right? This has to be bearish, and I mean, it makes sense. If you look over here, miners started to sell, the mining sell pressure went up, and they sold the exact top price roll to the downside, and we were in a bear market. Over here, they started massively selling in 2014. They didn't sell the exact top, but we started to break down to the downside. However, over here, in November of 2011, they started massively selling, and that was literally the start. That was the bottom. So, the miners were selling the exact bottom in this example. So, and then you move over to here, you can see there was a relatively big increase in mining sell pressure from about May to February. So, miners were definitely selling for a good amount of time, and you can see they were selling into the bull run. So when you're simply looking at Bitcoin mining sell pressure, you have to take into account, is mining profitable? You have to take into account, are they selling at the top because they just want to take some profits? Are they taking profits? Are they taking profits? Are they selling Bitcoin so they can, buy more mining equipment? There are many things that go into this chart. And as you can see, mining sell pressure going up is very 50-50 so far. So we're going to move on from this. Like we said yesterday though, tons of Bitcoin gets deposited on exchanges. What do you think they're going to do? They're going to sell it. So with that said, it does look like this massive inflow that we've been seeing for the past few days has been because miners want to sell. Now, another reason why I know that miners want to sell, well, let's come over to the hash rate. The hash rate has taken a massive plummet. Obviously, do bear in mind, this is on a massive parabolic run to the upside. So when I say a massive run to the downside, it has also just completed an even bigger run to the upside. But on this channel, I always say, the Bitcoin hash rate is a macro indicator. A lot of the time you can see right here, this was a poor example because the hash rate actually started going up where the bottom was, but you can see down here, hash rate was on a run, and price was actually going to the downside for the majority of this. And then you can see over here, price was running, and it took a very long time to break into that next bull run. And then you can see hash rate here was running up, and we've been in a bear market for the majority of this. So really, the hash rate is a higher time frame indicator, it is a macro indicator. However, if you look at the hash rate capitulations, often these correlate to miner exoduses, they correlate to miner liquidations, they correlate to miner capitulations, and they can also correlate to large exoduses from different countries. For example, quite recently we saw China. They were like, no, turn off all your computers, get out of the country, we don't want mining Bitcoin here. And because of that, you can see, boom, massive drop in hash rate, and the price definitely did not like that. So it's very interesting. If I come over to this thread that I just made over on Twitter, it's a little bit hard to see the exact tops and how they correlate over here. So I've put a couple of lines through the chart, but you can see hash rate capitulation down here. This was the final capitulation in 2018. Big hash rate capitulation over here. This was the first top in the 2021 bull run, and we obviously proceeded to put in a slight higher high before double topping and breaking down. But once again, we're seeing a pretty sizable minor capitulation right now with the hash rate breaking to the downside. So Like I always say, the hash rate is really a macro indicator, but when people are selling, it can often correlate to some pretty bearish stories. And if we do come over to some news articles, you can see not only this mining company, which is Firm Energy, there are plenty of miners which are currently defaulting on loans. This Iris Energy alone was defaulting on a $108 million loan in the past week or so. So if you do watch the channel, we quite recently talked about the Bitcoin liquidity crunch in terms of exchanges. One big exchange goes bust. Underneath that exchange, there's a bunch of different exchanges that hold reserves in that exchange. Those exchanges underneath go bust. Those exchanges underneath those exchanges go bust. And this cycles into a very bearish liquidity crunch. Now, the same thing can happen with minor capitulations. If Iris Energy is selling 108 million worth of rigs to pay back that loan, then obviously the hash rate's going to break down to the downside. When the hash rate breaks down to the downside, people are going to start panicking. People might sell more. The price of Bitcoin goes to the downside, and then you've got miners that were already extremely unprofitable. I mean, if you just look anywhere, I mean, you have to really be in a good geographical location at this moment in time to mine Bitcoin and make any profit whatsoever. I don't know about where you live. Maybe you live in El Salvador and you're getting volcano energy. Good for you if you are. But where I live in the UK, my energy bill's up 2x this year. So I would be making a loss if I started buying mining equipment. And, it's the same all over the world. It's no secret whatsoever. You can come over to, any CPI index, break down the baskets in the CPI, and energy everywhere is through the roof. This says that it's up 17.6%. I don't know how many of you pay your energy bill, but how many of your energy bills have gone up 17.6%? Mine hasn't. Mine's basically doubled. So the profitability of mining is really shooting through the floorboards right now. There are mining rigs, there are mining firms that are going insolvent. They're going to be selling their equipment so they can pay back these loans. And yeah, it's not looking good. Like we said, we talked about how liquidity crunches can affect the market. This is basically the same, but like a miner crunch, because this can really spiral if miners keep on turning off their rigs, if the price of Bitcoin keeps going down, and then the profitability of mining just goes through the floorboards. Everyone starts defaulting on their loans. Everyone starts selling their mining rigs. Electricity continues to go through the roof because, as we all know, if we look at metrics like flexible CPI, I understand this does say sticky price CPI, however, the sticky price is unticked and we're purely focusing on flexible CPI, which, if you didn't know, encompasses fast-moving baskets in the CPI, such as food and, of course, energy, which is what we really want to focus on here. So, the cost of energy is just absolutely through the roof. So by all means, miners start turning off their rigs, defaulting on their loans, hash rate goes down, price goes down, then, exchanges go bust, we have a liquidity crunch in exchanges, then we have a miner crunch, and all in all, it's just definitely not looking too good right now. Now, I don't want you to think me being bearish and this is like me saying that we're going to zero. I don't think we're going to zero. If you do watch the channel, I've been saying this for about a month or so, that I do think that we are in the final capitulation right now. And I mean, if you look at the hash rate, this major capitulation, I do think this could continue to break down for a little bit more. This kind of scenario that I think we're in is this one right here, where I kind of think that it's a little bit hard to see over here, which is once again why I pulled it up over this chart. I really think that we're in this type of situation that we were in 2018, where, people are turning off their mining rigs, they're selling, they're defaulting on loans, and we're very, very close to the bottom, in my opinion. Like I said, if you do watch the channel, my price targets, my absolute bearish price targets around about that $10,000 mark. I find it really hard pressed. The Bitcoin would break below 10,000 unless, of course, what I've been talking about in this video really does start to come into fruition. More exchanges go bust, more miners start getting crunched. And let's finish off on our final chart, the hash ribbons indicator. Now, this is often called the minor capitulation chart because we're looking at two different moving averages here, the 30-day moving average for the hash rate and the 60-day moving average for the hash rate. When the 30-day capitulates beneath the 60-day, it's often a sign that hash rate is taking a massive plunge to the downside. And once again, we talked about this. These plunges in hash rate are often correlated. In fact, they're always correlated to minor capitulations. Otherwise, hash rate wouldn't be going down if, the same amount of machines were still mining Bitcoin. So with that being said, looking at the hash ribbons indicator, a lot of the time, in fact, every time that you have a parabolic run up in terms of the hash rate and subsequently the hash ribbons indicator, as soon as you cross, it's pretty much curtains. You can see over here, 2019, massive parabolic run to the upside. As soon as the 30-day capitulated beneath the 60-day, boom, bear market, final capitulation, and this is what I think we're in right now. You can see, you know, there's been a few cases where we flipped bearish here, flipped bearish here, flipped bearish here, flipped bearish here, but we were more or less done with a parabolic run and started to chop to the side. And you can also see some of these minor capitulations, they're correlated to, you know, these black swan events like what happened in March of 2020. And by time the hash ribbons, which are of course, you know, 30-day moving average and 60-day moving average, by time they finally started pricing in this capitulation, we were already running to the upside. So bear in mind, the hash ribbons indicator is not going to help you when you've got a black swan event, and it really won't tell you anything about a black swan event whatsoever, because, you know, most of the time, as these are 30 and 60-day moving averages, by the time they start crossing bearish after a black swan, the black swan's pretty much already done. So, but with that being said though, you can see massive run up in terms of the hash ribbons. When they finally capitulate, you have a brutal run to the downside. Massive run up in terms of the hash ribbons indicator. As soon as they capitulate, we can zoom in, you can see this was the first top for Bitcoin, around about that 63,000 or so mark. And as you can see, massive parabolic run, capitulation to the downside, and massive run down in price action. Now, since then, hash ribbons have been running to the upside because, like we know, come over to the Bitcoin hash rate, the hash rate has been exploding through the roof, and we're only finally starting to see, you know, miners default on their loans. We're finally starting to see these minor capitulation signals start to play out. We're seeing huge inflows from miners depositing their Bitcoin balances on exchanges. And once again, coming back to our first chart, you know, miners are selling 550% more than they were, you know, a month or two ago. Well, technically 6 weeks ago. So that's really all I wanted to update you on for this video. Not too much to update in terms of the TA, but yeah, thought I'd let you know that the Bitcoin miners are currently capitulating. If you do enjoy this content, as always, make sure to hit that like button, comment, share the videos with your friends. Also, if you do want more economic data, threads for on-chain metrics, memes, etc., come follow me over on Twitter. It is @618_cowboy. That's all I've got for you today, my friends. Cowboy out. Peace.